Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius. Today is the 7th of June, 2023. So, yeah, welcome, everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest, and yeah, I'll disappear from that little left corner in there, and I'll be back in a bit. Okay, so also before we go further, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. So, then basically, just let me correct this monitor here. There we go. I think this is a little bit better. Right, guys, let's jump into the charts. So the first one, the first picture here, the first technical picture that I want to pick up here is on Nikkei, as always. We can see that this barrier, the 32,573, we did kind of overcome it a little bit yesterday, but this is, by the way, the futures. This is the future index. All my indices here are futures. So, yep, it overshot it by a little bit, but then it kind of, the bears kicked in and started pushing the index back down. And today we are seeing a sell-off here a little bit. Now, look, that's all normal. That's all okay. In a way, that was kind of expected, to be honest. And this is what I talked about yesterday. Yeah, not really maybe good for the bulls. However, I think it's a healthy correction. That's all fine. Yeah, Chinese exports, the decline in Chinese exports is maybe giving that a little bit of a, reasoning why we're seeing a bit of a sell-off. So, but I'll pick up on that in a bit when I jump into China 50 index. But look, for now, the technical picture is this, that in order for me to, let's say, consider larger corrections to the downside, I need to see a break of this steeper upside line taken from the low of the 11th of May. If I get that, then yes, I'll consider more downside. But again, let's not forget that even up until this upside line, the steeper one, any move lower here could be classed as a temporary correction before another possible leg of buying. So in a way, something around these lines here. Yep. So just kind of do not exclude that scenario. If we break the upside line here, then yes, we will start looking at some lower levels, and then we could aim for this other upside line taken from the low of the 15th of March of this year. So just keep that in mind. ASX 200, yes, not loving the Chinese data. Look, China, okay, I'll probably mention it now. We did get some lower exports, so the exports, the percentage of the change in the exports has shifted to the downside. Look, it's not that it's a big problem that we are in the minus because the number came out at minus 7.5%. The forecast was only for minus 0.4%. It came out minus 7.5%. So that's quite a big jump. And or should I say a big drop. The previous number was at 8.5 plus. So, of course, the market reaction is not very good. The problem in all that is that, look, given that China is the one of the major exporters, Yeah, no secret there, right? Basically, this is the indices are probably falling off the cliff just because thinking that this may push central banks towards maybe some possible rate hikes. Now, why I'm saying this, because look, if we have a lower supply, that means the demand is still the same level. We have a lower supply, we have an increase in prices. That means higher inflation. What are all central banks doing right now? That's right. They're all trying to fight that inflation. So that means that basically a potential rate increase could happen, could be still on the table, and that's where the indices are kind of falling off the. No, I wouldn't say falling off the cliff. No, they're not falling off the cliff. They're just casually sliding to the downside. So that's where the fear is kicking in. So look. I will stick to my idea and rules and I will stick to my words that before the meeting, which is on the 14th of June, before the meeting, we should have some sort of a moment, where it will just kind of tell, the Fed, oh, please, can you not, the situation will be saying to the Fed that, oh, please don't raise rates because everything's so bad, and blah, 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 and stuff like this. I'm gonna stick to that because it happened like already twice before the previous two. We had like the mini bank crisis, and that didn't really. I mean, like I said, that was quite interesting to watch. But look. Coming back to ASX 200, yes, we're currently, from the technical perspective, we're currently resting near this 7,131 territory. And look, if we do go below this hurdle and stay below this hurdle, then yes, further declines are possible, but I'm only aiming for this territory between the 7,064, 76 levels. CNX USD, which is our China 50 and the FTSE China 50 index. Okay, from the technical perspective, I'm still sticking to the same idea that if we do break the downside line, then there's a possibility for this one to move a little bit, to the upside, because a short-term trend will be violated, and this could signal a change in the trend. So that's why, I would aim for slightly higher levels. But for the downside, I need to see a drop below the 12,237, and then we could go from there. So yes, as you can see, the China 50 index is also not loving the data. Well, what can you do, In general, like I said, the problem is that, okay, we have been around these areas like this minus 7.5 about 2-3 months ago. So the March and the February and December data, they were also they were also like in the minuses, like, so okay, but the thing is that it's becoming quite often. That's where it's kind of a bit of a trigger there. So look, we'll see how it works out, of course, because previously the exports have been quite big since August 2020, when data came out, the first data is August 2020, and until October 2022 we have never seen a negative number. That's like interesting. But then since then, like, we started getting into the negative zone, and that's where I think that the market is getting slowly spooked. But of course, let's see how it's going to play out. Of course, for now, the game plan for me is this that I just mentioned. Nasdaq 100. So, okay, just a quick mentioning of the Fed Watch tool. Yep, we are now for no rate hikes. We're the percentage probability for a rate hike is for zero. It's the probability is higher for zero. So, okay, look, I think that it might stay like this, to be honest. Now, I think, in my opinion, because I adjust according to what's happening in the market, now I think that this might stay a little bit above 50%, even going up until the 14th of June. Will I be right? I don't know. We'll see. But I think that there could be a chance for this one to stay like this. I think that there is a good chance that there won't be any rate hikes. However, of course, we will keep an eye on the market. I mean, look, RBA came out yesterday with an increase, right? I mean, although the expectation was also for a no rate hikes, but they came out with one. So let's see. I would say this is a bit of a we're in a bit of a pickle here. So for now, I think that there's not going to be a rate hike. However, we'll have to reevaluate things probably going into next week, into the beginning of next week. But yeah, look, for now, Nasdaq, it's nothing major in general this week for the US. I think that there's not much happening. So, don't be surprised if, for example, if we just remain flat. And I wouldn't be surprised if we remain flat going all the way up until the meeting. So just kind of, it sometimes happens. But the main thing to watch today, of course, is the Bank of Canada interest rate decision. Yeah, that's going to be quite interesting. So also currently no forecast, there is a forecast, but no expectation for a hike. So it's expected to come out as previous at 4.5 plus 4.5%. So yeah, let's like I said, let's wait and see. Maybe, to be honest, I maybe it could follow the footsteps of RBA. Well, again, I'm somehow kind of, although me personally, somewhere deep inside me, I would actually like to see a rate hike from the BOC. But again, what do I know? The market doesn't always give me what I want. So for now, long story short, look, if we do, I'll jump into the Canadian dollar pairs in a bit. I'll touch that subject there. But coming back to Nasdaq 100 here. Look, for now, the technical picture is this, that I need to see a drop back below the 61.8% retracement on the Fibonacci here that I've mentioned already before in order to consider some lower levels. And for the upside, I need to see a push somewhere above this territory, above that 14,725 territory in order to go higher a little bit to the upside. Now, Dow Jones Industrial Average, also, look, I've mentioned this yesterday. I said that as long as we stay above the EMAs here, the 50 and the 100-day EMA, then yes, there is a potential for this one to go back up. The only thing is, I think that if you're a little bit on the careful side, maybe something like this could work better for you. So the 33,850 territory could be the one to watch if you're looking for some higher levels. So a nice good pop above that barrier, yes, may attract more buyers into the game. So I'll just highlight that for our future reference. And yes, I think that this is going to be an important area to keep monitoring. If we do fall below the 50 and the 100-day EMA, then yes, I'll consider a larger correction to the downside, because the reason why I'm saying correction is because we're still above this tentative upside support line taken from the low of the 25th of May. DAX, the German index. Well, not much to talk about here. Look, I mean, I've mentioned this before, and I'll stick to the same rules. I think that with DAX, I think the analysis is going to be boring. Because it's going to be doing the same thing again. Like for about a month here, I was talking about the same stuff. Then we had something a little bit more crazy. And then I think now I'm going to again talk about the same stuff on this one, because look, we're back into this range, and for now you can see that this 16,063 territory approximately around here is providing that good resistance. So long story short, I mean, I would like to see some sort of clearance first before I could consider the next short-term directional move. So, excuse me. So basically a push above that 16,063 territory may attract more buyers into the game. For the downside, a drop below the 15,800 zone here could be ideal. The FTSE 100, guys. Look, I've mentioned this before, and I said to you that, look, if we do pop above this, and we do pop and stay above this, this 50% retracement here on the Fibonacci, then yes, I'll aim for that 61.8 or maybe a little bit further north towards that 100-day EMA. So far, so good. Yes, we did correct back down a little bit, but that's all fine. I think that's all still okay here, as long as we remain above that 50% retracement here on the Fibonacci, which is not far from that 7,625 territory. If we, if we stay above this, I'm leaning a little bit more towards the upside. For the downside, I need to see a drop below that 38.2, somewhere around here. At the same time, we would fall below the 200-day EMA. Now, let's have a look at the dollar index. Okay, the dollar index is quite interesting because, look, after we found good support near this 103.40 zone, let me actually just mark it also for our future reference. So after we found good support here, we have rebounded, yes, and strongly, and it seems like we're now pushing nicely to the upside. However, as I said before yesterday, I would like to see a push above this 104.61 territory in order to get a little bit more comfortable with higher levels, because a forthcoming higher high will be confirmed, and we could aim for that 105.87 territory. Another thing that I really wanted to quickly run by you here is this downside line, which I don't like. Just a sec. Up. There we go. So this downside line, why it's narrow? Oh, my colleagues, honestly, let me just adjust this normal. So this downside line, which could be of interest to us. Now, again, it's very tentative because, again, you can draw it this way, you can draw it that way, whichever way you want. But basically, okay, we could consider it. Maybe on your charts where you're looking at, maybe it's better a little bit. But I would say this point here, look, if you want to consider some higher levels, you could already start doing that because we're breaking this downside line. We're not breaking this one yet, so maybe just for that extra confirmation, we could keep this on the chart. So yeah, if we do break this downside line and we also pop above the 104.61 territory, then yes, more buyers could join in. Could be quite an interesting a moment here. However, if this downside line somehow continues to provide resistance and yes, we start shifting back down, yes, I will consider some lower levels, maybe, but only if we do fall below this hurdle, this 103.40. Until then, I am just going to observe the price action. Let's have a look at gold, guys. Gold is quite interesting as well here. Look at this. We're after yesterday's move to the upside, we didn't really go all the way towards that 50-day EMA. Instead, we just kind of slowed down somewhere here. Look, in general, we still have a chance to move higher. We are still above this upside line. Somehow, we're still holding above it. This upside line is drawn from the low of the 3rd of November. And if you're looking for some higher levels, then there's still an opportunity for you to go in. However, in my opinion, I would rather get more comfortable with the upside on a break of this territory here, which is between the 1983-85 levels. If that gets clear, then yes, more buyers could join in. For the downside, even if we break the upside line, I will actually get a little bit more comfortable with the downside if we do drop below the 1936-39 levels. And then, yes, we could kind of go from there. At this point, I am just, like I said, I'm just observing the price action. I'm not really comfortable with this area here. So just, keeping a close eye on it. Silver, again, also the same story, to be honest. I mean, I'm not really happy with what's happening right now here. I would say if you're looking for some lower levels, then I would need to see a better clearance. Look, this is what I mentioned to you yesterday, that I need to see a nice good drop below this territory right here, below this area between the 23.52-57 levels. And then, yes, I'll get a little bit more comfortable with further declines. But yesterday we got another false breakout here. It just kind of oscillated around this territory near that 100-day EMA. One thing that kind of still supports the downside scenario is the fact that we're still below the 100-day EMA. However, if we start popping above it, this is the green line that I'm talking about, then yes, I will consider a move towards some higher levels, but only maybe up until this this 50-day EMA. So let's keep an eye on that one, of course, and I'll go from there. Oil. So yesterday I ran by you this idea of a possible rising wedge pattern here. Look, I think that for now at this point, as long as we remain here, we could still drift slowly to the upside, but it could be a bit of a sideways action here. So, you know, it could be a little bit up and down here. So just kind of be wary of that. We could still see some moves to the downside, but again, if this upside line holds, maybe a rebound could be possible. So in other words, at this point, I'm not really comfortable with this, you know, trading it here, unless it starts pushing back above the 74 territory right here. Now, if it does that, that's where I will examine some higher moves here, some higher levels. And yes, for the downside, I would actually need to see a break of the upside line here, taken from the low of the 3rd of May, and then we could start considering some lower levels here. To be honest, not the most exciting moment right now in oil, but hey, maybe we can squeeze something out of it. So, Bitcoin. So, roller coaster ride. Okay, Bitcoin. Right. First of all, let's get rid of this Fibonacci. I think that it needs to be tied in. Look, in general, we had that move, nice move lower here initially on Monday, right? That's when if you're not aware, that's when the SEC kind of filed a lawsuit against Binance and Coinbase. So yeah, that's going to be an interesting one because look, to get into that a little bit deeper, you can actually read about, like, you know, which what are they exactly accusing them of. But in general, it's mainly kind of the Binance is getting accused for the operations in the US, you know, under the Binance.US domain company. So yeah, that's what's kind of triggering right now the SEC, what's tripping the SEC. But look, of course, the whole thing is to just kind of put more shade on the crypto world, you know, to regulate it more, which is fine. But again, you know, really depends how you do it. You know, it seems like right now, let's bring everybody down. Like Ripple is not enough. It seems like let's push. It's okay to me. It looks like this: that SEC seems to be losing the battle against Ripple, and now to kind of you know, to show that they're still working, they're still doing something. It seems like let's kind of accuse somebody else. You know, so okay, maybe it's not the case, but look, in general, I hope they have good intentions in their hearts. You know, but this is becoming a bit of a show. So it's like, let's bring the whole crypto world down. In a way, I understand, I agree that some sort of maybe regulation is required. But on the other hand, the methods that are used kind of, it seems a little bit anyway. But look, that's of course, all this is of course having its effect on the crypto world, on different cryptos. Bitcoin, as you can see, this roller coaster ride seems like, yes, at first they got hit. Then I think that Binance, this is where they responded they're going to fight it because they don't agree with it, and you know, they pushed the crypto back up. So look, don't be surprised if we're going to see some sort of action like this, like a bit of a roller coaster ride. And if that's the case, then yes, I would say be careful if you are day trading or, you know, intraday trading cryptos. Then be careful with that, because again, the spreads might be, you know, maybe not in your favor, or you know, something else, and the volatility could not be in your favor. So just be careful with that. But look, from the technical perspective, I will stick to my guns, and I said to you before that in order for me to aim to the upside, I would like to see a break of this downside line and a push. And actually, this downside line, I think I need to redraw it. Yeah, there we go. Something around these, something around here. Look, it's a very sensitive line. Don't get me wrong. But for now, I would say this way, that if we do push above this downside line and above that 27,512 territory, then yes, more buyers could join in. For the downside, a drop below this highlighted territory right here could do the trick for a few more sellers, and we could then aim for this upside line taken from the low of the 30th of December. So this drop below this highlighted zone right here, not this one, let me get rid of it, this one right here. If we do fall below it, we could fall also below the 200-day EMA, and potentially this could lead to a larger correction to the downside. But let's see which way this one's going to break out to. Dogecoin. So also a roller coaster ride here. We saw. Look, initially it worked out nicely. We fell below my target. I talked about this. To be honest, perfect. I mean, okay, not exactly the 0.0626 territory, but that's fine. It's always the area that we're targeting. We're never targeting the exact level. We're targeting the area. For example, even here, let's say if we get closer to the 200-day EMA, for example, you do break this highlighted zone right here, the area between the 0.0750 and 55. If we do clear that, then yes, I would aim for the 0.0816 zone, approximately around here. But actually, I would mainly aim initially for the 200-day EMA, and then I'll go from there. But look, that's my upside scenario. But for the downside, yes, the downside scenario is still valid. Again, I'm still keeping an eye on this area, although it got violated. But still, I'm quite loving it because it's kind of playing a good role right now. So if you do fall again below this, maybe this could open the door again towards some lower levels. AUDUSD. So jumping into a few pairs very quickly. Look, so far so good. I've talked about this yesterday. I also mentioned this. So we after clearing this 0.6564 territory, we went higher. We ended up testing the 50-day EMA. We tested then the 100-day EMA. So all good. Now, if we clear the 100-day EMA, I'm going to go towards that 0.6710 territory. If we don't stop there, of course, yes, the next target is the 200-day EMA. AUDNZD, not much to say here as well. We're still on a rocket ship, and we're going to the, well, not to the moon yet, but at least to the first, to the first clouds. And again, or actually, no, already not the first clouds. I think that, we're in stratosphere. But anyway, long story short, I talked about this yesterday. I said that if we stay above this 1.0931 territory, I'm leaning towards this 1.1013. And this is where I mean when I mean that I'm aiming for the area, not the level. Yes, the ideal scenario, level, touch, perfect. But whenever we sometimes get close to those areas, because in a way everybody's kind of targeting that, and everybody sees that. So this is what the market sometimes does. It kind of gives you that little tease. Some maybe late buyers are trying to jump in here as well, thinking that this is a good level, and it is a good level, but maybe it'll stop around here somewhere and then reverse back down. So that's what I'm considering right now. Maybe a bit of a correction at some point. But again, only as long as I need some sort of clarity still, because at this point, this is just kind of, it's still up in the air because again, it is up in the air. Honestly, it's like flying here. But in order to consider some lower levels, I need some sort of confirmation, and at this point I'm not really getting that. So look, maybe if I would like to draw Fibonacci here, but I think it's a little bit maybe early. Let's see, we need to see some sort of a hold up here, a couple of candles here that could show that that it's struggling to go further north. So I'm still, like I said, I'm still keeping an eye on this 1.1013 territory because it's quite an important one for me. Here it's the inside swing low of the 21st of February. If we get a nice hold up here, maybe a bit of a correction back down here, could be possible. So in other words, something like this. So now then, AUDCAD. So yes, of course, keep your eyes on the Canadian dollar today, guys. So if by any chance BOC comes out with a hike, well, we could see, the Canadian dollar strengthening across the board against its major counterparts, and we could see some, some declines in AUDCAD, USDCAD, EURCAD, GBPCHF, and all that stuff. But if, let's say, it sticks to the same, 4.5%, interest rate, yep, so maybe we could see a continuation move higher. For now, from the technical perspective, it actually looks like that there could be some more upside as long as we stay above this 0.8944 territory. My next target is the 50-day EMA and then the 100-day EMA. NZDUSD, something that I haven't looked for quite a while, but look, I've removed all the lines here because, again, I wanted to have a fresh look, and so far I can see that we are, sorry, I removed, the system removed it initially, but now I can see that it's back. Okay, let's keep it. Actually, you know what, they're not bad lines. For now, look, after I've mentioned this range, and I told you that if we do clear it, I'll go lower. These are some of these obstacles that I'm going to be aiming for, and now I think it's time to adjust a few lines. Now, look, basically, if you're looking for some further declines, I would say this way: as long as we stay below the 0.6085 territory right here, then there is a good chance we could see a drift, back to the downside. However, if you're looking for some higher levels, at least in the short run, a push above this territory, this highlighted zone, above the lower side of this previous range would be needed. Then, yes, we could aim for this downside line and maybe even above that, but we'll go initially towards it first. But yeah, for the downside, a drop below that psychological 0.60 territory could be a nice one for the bears. USDJPY. So, look, I talked about this idea yesterday that maybe we have ourselves a bit of a tilted head and shoulders pattern. Just bear with me. Now, look, it could be, of course, anything in general, anything could be, but we always wait for that confirmation break. And here for now, although my heart is sitting towards that, is loving the idea of a head and shoulders pattern. Still, until I'll get a break of the neckline, I'm not really getting comfortable with that scenario, because it could still, rebound from this upside line, could push back up. So, the drill basically. So if we do break the upside line, great, I'll go lower, but also I'll get even more comfortable with lower levels if we do drop below the 138.75 territory right here. And yes, that may open the door towards some lower levels. For the upside, I would need to see a push above the 140.93 territory right here, and this would confirm a forthcoming higher high and could potentially attract more buyers into the game, because yes, like I said, forthcoming higher high would be confirmed. So at this point, what's left is to wait. If you're seeking for some sort of an opportunity around here, to be honest, okay, maybe on an hourly chart something like could come up, but to be honest, look, on an hourly chart, I'm kind of leaning a little bit more towards the downside, somewhere around this, 139.12 here could be the case, could be a good one. But for now, yeah, a confirmation break is still needed here. So, again, we have this upside line, which is in the way. So that's why the hourly chart, yes, could be good, but then you still have to take into consideration this upside line somewhere around here. Because if it provides good support, then, your hourly chart is no good, because you're kind of missing the bigger picture. So, long story short, that's the game plan. Let's wait for a breakout. USDCAD. Okay, this one's quite interesting. We're still below the 200-day EMA, so that means that there could be more downside scenarios here, especially if we continue, let's say, to trade below this 1.3415 zone. If we do drop again below it, I will aim lower. Again, as I said, to keep your eyes on the BOC decision today. If we jump back above the 200-day EMA, I will lean towards the EMAs, the 50 and the 100-day EMA, and then we will go from there. Maybe if it clears that, we'll go further north. This upside line needs to go. I think it's a little bit already outdated. Maybe a downside line here could be a good one. Yep. Let's wait and see, of course, if that's going to work out nicely. Because maybe, actually, this is what I'm just seeing right now. Maybe this could be a start of a very long-term triangle. Okay, let's see. That's why my arrow will be shifted only up until here somewhere. Yeah, keep your eyes on this idea. Not saying don't really focus on it too much, but just keep in mind, if let's say we do again drop below the 1.3415 territory right here, then yes, I will aim lower, but I'll aim for this upside line. So GBPCHF, so not much to add here. We're stuck in this little area, which is quite an important one, as I can see. This area is between the 1.1260 and the 1.1277 zone. Look, I would say this way, as long as we stay below the 200-day EMA, I am leaning towards the 100 and the 50-day EMAs. If we are looking at some let's say, even lower levels, then yes, the target here could be this upside line drawn from the low, the 25th of April. So in other words, if we do fall below the 1.1260, I'm leaning towards the downside, initially aiming for these two EMAs. And if those get cleared, then I'm aiming for the upside line. For the upside, I would like to see a break of this downside line. Simple as that. And because look, it's quite an important one. If we do clear it and stay above it, this may open the door to some higher levels for sure. Or actually, sorry, I wouldn't say for sure, because nothing is sure in the market in general. So, but it could increase the chances for a further move north. GBP Aussie. Boom. Okay, look, I haven't picked up on this one for a while now, but it worked out nicely. Why? Because, look, I said to you before that if we do stay above this upside line, a rebound could be possible. What we did, we failed to stay above it, and we fell. And I said then if we do drop below the 1.8775, then yes, I'll go lower, initially aiming for the 50-day EMA, shown as the red line, and then the 1.8588 territory right here. So, very good result. Very good result. Yes, a good test here of this territory. What's next? Well, if we do clear this one, then yes, my next target is the 100-day EMA. Together with this little hurdle, I really like it a lot. This one right here, the 1.8399 zone, or in general, the 1.84 territory. Let's round it up here. 1.84 zone could be a nice, good level to watch. And then, yeah, we'll of course start aiming for the 1.8248 or the this 200-day EMA. But we'll get to that point. Let's go slowly, not rush into anything. For the upside, I think that it's best to keep in mind of this 1.8775 territory right here. If we do climb back above it, this may attract a few more buyers into the game. And then, yes, we could aim for this 1.9044. I'm just while I'm talking, I'm redrawing some of the levels, I think that which could kind of carry more significance. EURCHF, quick update on this one as well. Not much to talk. Look, I've mentioned this before in my previous videos. So basically the same analysis kind of is valid. We are still in this falling wedge pattern. And look, although according to all the TA rules, these patterns tend to break to the upside. However, we need some sort of clarification. And in this case, the clarification is a break of the upper side of the falling wedge. And not only a break, we also need to see the body of the daily candle staying above it. If we do stay above it, then yes, great, more buyers could join in. In terms of the downside here, look, in general, as long as we stay inside the pattern, there is still hope that for the bears that we could see, a drift further south. But at the moment, as long as, let's put it this way, from the shorter term perspective, if we continue to trade below the 0.9706 zone, somewhere around here, My next target is the 0.9677. If that gets cleared, then yes, this is where more sellers could join in, and we could start aiming for the lower side of this falling wedge. Let me grab the upper one here just to kind of mark it this way as well. EURCAD, also similar. I haven't looked at this one for quite a while. As you can see, it kind of shifted a little bit here. So we, after breaking this 1.4513 level, we ended up testing the 200-day EMA. We oscillated around it a little bit, and now the question here is that what's going to happen next? Well, for now, look, the simple approach, the simplistic approach on this one is that if we continue to trade below the 200-day EMA, further declines are possible. The only problem is that with further declines is this little hurdle here, the 1.423839 zone, approximately around here. If we do get a hold up somewhere around here, maybe a bit of a rebound could be possible. So, in other words, something maybe like this and a move back to the 200-day EMA. If that gets cleared, by the way, this is this level here. This is a very strong area of support in general. Let me grab this highlighted zone. I think I'll use it here as well. Very nice, good area of support, potential support. Like I said, if we do get a hold up here somewhere, maybe a bit of a rebound here could be possible. Now, another thing has to be redrawn here. I think this highlighted territory, some of the levels need to be adjusted, so I'm just going to mark this one. This here, it's a little bit of a lottery, so yeah, it's not really ideal. Okay, I'll keep that 1.4735 zone. Look, for the upside, I think that maybe this 1.4513 territory could still be good, because if we do break that one, we could also break this downside line. Excuse me, my voice is going down a little bit. So we could also break this downside line, and this may, you know, change the direction of the current short-term trend. And yes, we could, you know, go a little bit more to the upside. Maybe we could start looking at some higher levels earlier, but again, depends on how this is going to trade around here. For now, I'm leaning a little bit more towards the downside here, towards this territory, the 1.42 39.35 levels, approximately around here, a good area of support, and then we'll go from there. And finally, EURUSD. Look, we're falling back below the 200-day EMA, but my problem here right now is that we are oscillating around the 200-day EMA, which is just kind of keep on moving sideways around it. Yes, we're currently moving lower below that 1.07 territory, or should I say the 1.0693 zone. I've mentioned this yesterday. I said to you that if we do fall below it, I'm going lower. We fell below it, I'm going lower. If we continue to trade below it. Also, we fell below the 200-day EMA, so that all this is kind of, you know, putting that negative spin right now on the euro dollar. For the upside at this point in time, probably I would like to see a push above the 1.0760. I get it, we're missing out on a bit of territory right here, but to be honest, I'd rather be safe than sorry. Look, from the very short-term perspective, if you want to consider something earlier, then maybe you could keep an eye on this downside line, taken from the high of the 2nd of June. But and then you could, for example, you know, aim for something around here. Yes, could be a good option, but you have to kind of keep in mind that, look, maybe this could actually end up being something like off a range, because again, at this point, yes, we're falling below the 1.0693 territory, but no one's saying that, you know, it might not stop around here. This has been a good area of support previously. Maybe it could also test this area or this area, so I can draw a bunch of key support levels. So look, if you already missed let's say the drop below that 1.0693 territory, below that 200-day EMA, I would say at this point, just leave it for a little bit, let it settle, let it show what it wants to do. If it wants to go further south, okay, we'll consider further levels here, and especially if it falls below the 1.0660. If it falls below that, then yes, my next target is the 1.0635, and if that gets cleared, well, guess what? In a forthcoming lower low will be confirmed, and potentially could attract more sellers into the game. So guys, I'll have to wrap it up here. This was a quick session. Look, a lot of things kind of are still flat, and a lot of things have not changed since the previous analysis that I did. So that's why, yeah, the session went kind of a little bit quicker. But I hope you found it useful. In general, guys, thank you very much for tuning in and watching this till the end. I really, really appreciate that. So thank you very much. Really appreciate your comments, your views, your time, your rockets that you put there sometimes. So really, really appreciate that. Look. And if you want to catch me tomorrow morning, as always, 6 o'clock GMT time. For now, have a beautiful trading day. Stay safe. Have your stop losses in place. Keep your eyes on the economic calendar. And yes, don't overtrade, and everything will be fine. And also risk only what you can afford to lose. Yeah, but unfortunately, that's the the reality. That's the thing that you always have to keep in mind. If you think that it's no fun, well, guess what? Trading is not always fun, fun in games. So, anyway, tuning out here, guys. Thank you very much. And I'll see you tomorrow, 6 o'clock GMT time. Bye-bye. Hey there, thank you very much for watching this one till the end. I really appreciate that. So, like this video, we speculate your next mouse movement will be towards the subscribe button.